Hey guys, this is Simon with Trade and Perform Coaching. Wanted to cover a couple of very important points in tonight's video and trade review for the evening. So when I was going over my notes today, first thing I want everyone to know, I actually had a down day. I hate having down days. So the things that I took out of today's trading, which I'm going to cover, is the subjects of discipline, over ego and skill, confidence in the next trade, and self-preservation. So let's start off first talking a little bit about the context of the day. ES was gapping down, not enormously, but it was gapping down. And normally when we gap down, we would expect an attempt at gap fill, right? Additionally, we had an open gap sitting below, right? And we would expect both of these areas to get tested at some point in the day. That's pretty easy from a kind of a basic trade plan idea, right? I'm interested in open gap. I'm interested in the gap fill / Globex high area, and then my focus is on 10-point rotations. So a lot of times when I've been reading a lot of military books, and they talk about the fog of war. So I want to talk about the fog of trading for a moment. So while that was pretty clear, and if I could have just said, well, short here and go long here, that was obviously a perfect day, and there was no problem. There was, however, some issues that caused complications. So first of all, what I was hoping for in the day was when we started out that we could test and let me expand this for a second. There we go. So my hope for the day was that out of the gate, we could come down and we could give a test. These are the zones, the white dotted lines are Globex high and low, right? So the idea that I had was that we would come in early in the morning in the first 30 minutes, and if we could take to 21.50.74, I wanted a long half size double stop, meaning I was fully prepared for it to come down and test that 20.48 and for a move back to the upside. Okay, the principle of the trade was the principle or the idea of the trade, again, that was all taking place over here, but the idea behind that trade was solid. However, the market didn't want to cooperate with me out of the gate, right? If you look, we opened up, let's spread this out a little bit. We open up out of the gate. If you look at your NYSE tick was negative 1,000, and we got responsive buyers right out of the gate. That made sense because it was in line with our general overall principle that buyers are in overall control of the market. What does that mean? That we're going to go keep shooting straight up? No. What it means is that on pushes down, there'll be responsive buyers for pushes back up. Okay. So out of the gate, I don't get really any area. I don't even get a test of Globex low. Pretty much just open. Did not test Globex low. Did not test the 20.54, which I had as support area, and it didn't get to the open gap. It just traded up. Okay, trade gone. We get to test of Monday's low. This is always a debate for me, right? Do I want to take Monday's low as a short or not? Well, what we did here is we go and make a cross reference to what NQ is doing. So NQ is not lining up with the ES. First of all, it opens up well above Globex low, and it drives out of the gate. See how we dojied on the first bar over here? We drive out of the gate. NQ is strong. That's fine. That fits into our overall premise that the market has responsive buyers from rotations lower. What makes this difficult here is that you're trying to figure out who has the leadership, and NQ is telling me not to short. I don't have a problem with that, but the question becomes, well, when do I not short, right? Or when do I get aggressive on the short? The backside test of Monday's low was logical, but it was only logical in hindsight. I can show you 100 examples of where we come into the prior day's low, and we back test, or we continue to push all the way into prior day's close, which we did in this case. But when I look at NQ already in the morning session, we are opening above prior day's low and above Globex low. These two are not lining up. That kind of sets me up for some confusion. Next, we do not, or we're unable to close the gap. We pause here for 25 minutes, reject, and then here's the hardest part of the day, and the part that should have been a bit of a warning sign for me. I did not take it aggressively enough. We auctioned all the way through here very easily. Then we auctioned all the way back down easily. And what the market decided to do here was it came down to complete the auction down to 20.54. It tagged it. We still were unable to get the open gap completed. Too many people see this open gap. This is what happens. People get pushed in. the market pushes to a new structural low, meaning if we look at the chart a little bit differently, this became our structural low, essentially right here. We closed below the structural low. We closed back in. Now, here's what I didn't expect. We trade all the way back up to the other end of the range. At this point, I'm still waiting to come and get a test of Globex low, right? We taste all the way up to the other end of the range. Why are we getting a market like this? Well, if you look at NQ, right, we come over here and we expand NQ. Wow, I think I just closed NQ. Didn't want to do that. Let's see if I can open it up again. There we go. If we look at NQ, let's do that really fast. There we are, and wow, I eliminated the chart. I didn't mean to do that, but that's fine. Not a problem for the sake of our conversation. If you look, this was back here, prior day's low. This is prior day's high. So at this point, NQ, first of all, is making a higher low. At this point, it doesn't re-auction its whole area. It fails to set a new low, and it holds, and it makes no attempt to re-auction these lower areas back here to the left. The market likes, for those of you who aren't familiar with auction market theory, the market likes to re-auction areas that are poorly auctioned, and we just barely dipped into the poorly auctioned area and responded back up right out of the gate. We do not make a higher low, right? Contrast that with what's going on in ES. Same time frame. We're pushing up. We're unable to get gap fill, and we push to a new low. So these are markets that are not in sync with each other, and what that forces is people to play catch up. We get an overcommitment of people trying to shoot for the open gap below, which would seem rather obvious, right? So what does the market do? The market does what it's supposed to do. It punishes people to the upside. We clear this whole area, and furthermore, when we were pulling back through here, I was fairly certain, because of the strength in ES, that we were going to get a response off the 50-60 retrace right in here. I actually took it a little bit in front of that 50-60 retrace for the first time through. And normally, when a market is strong, okay, when a market is strong, we will get a pattern that looks like this. Okay, so we will open up, push up, get some retrace, and then continue higher. This bar right here handed me my first loss on the day. The market sets a marginal new low, traps back in, and comes back to the other end of the range. I had no problem figuring this part out. Again, when you see markets rip through here, immediately I go, okay, I do not want to trade in the middle of the range. And if anything, I want to see us make an attempt to break new high. And then I will attempt the push to backside test this area of structure right here for a push and a break back into a retest of yesterday's high. The logic being that we would play catch up to NQ, which at this time, right, if we look at NQ, it's exactly what it did. So if I had applied that same pattern to NQ, compact it a little bit, here's the 50-60 retrace, right? Now, picture this, right? My stop was essentially at the low of the day on ES, right? I took a trade just above the 50-60 retrace, right? I expected it to come in, it responded, but then even though they shook out and ran the stops behind the 62 retrace, that part was not surprising. I've seen that before. But then we come and push all the way up to a new high. This is the pattern I expected in ES. The ES was simply weaker and re-auctioned all the way down, set a new low, came back in, and then made the push back to the upside. Okay, so that's one stop on the day. I want to go and take a step back really quick. I'm 9 minutes in. I usually have my first trade as profitable, right? So now I'm already a little bit leery. The next step that I take is I'm very clear. NQ is still leading. We didn't push to a new low. Buyers are in control. So if I make a mistake, I want to make the mistake to the long side. So I do not short this 50-60 retrace, or as a lot of people refer to it, back to the mid. I did not short it successfully. I did not get, and that thought process was successful. I didn't get run over, right? So what have I done here? I've become alert that my first trade idea did not execute properly. I'm aware now that we are having very little regard for the middle of the range, that I don't want to trade in the middle of the range, right? And I've gone from making a decision that was a fine trading decision. There's nothing wrong with it. I accepted the risk in that setup. I took the retrace. It just simply ran me all the way over to a new low. Where I could have made the critical mistake at that point was turning around and going, okay, they got me long. I'm going to take them short. I didn't make that mistake, right? So I didn't get run over through this process. We bust to a new high, we closed the gap, and we pushed to Globex high. Now, this is my thinking at this point, is that we're going to come back and we're going to follow this pattern, which is we broke structure now, we've re-auctioned all of this, we're going to come back, backside test, and push up. But I'm a little early. I try to get aggressive on this, and I'm short here, and I'm trying to get a push to the upside like this. So here's where I made my second mistake. I'm long in here. I scale, well, there's not even a scale. I simply close out half my position right in here for flat, okay? And that was a good decision, right? What I was trying to do is was trying to adapt to the slow grinding nature of the market, because what I thought was going to happen, right? And this, again, when the market gets a little bit harder, can really trip you up. I thought we were going to get this price action up here, so I wanted to be patient. Why? Because if I'm not patient there, I can't be patient over here. I'm patient. I take my second stop. Now realize my second stop came on half size, right? I closed out half the position. Also, I far exceeded the 5-minute rule that I usually have, 5 to 10 minute rule that I have for scalps. That was me trying to adjust for what I had anticipated would be a slower, grindier market. NQ was already above prior day's high, and my thinking process was that we were going to make a push up to and test Monday's high, 2066 to 2067. From 2060, that was a pretty nice trade. So this is where I want to, and again, these videos are made mostly for the benefit of the people that are in my room, so they can take the lessons that I've learned and apply them to their own trading. If I've been stopped here, and I've been stopped here, and I'm not in my max stop loss, right? I'm not in my max stop loss. I'm down about, I think, 5 points on the day, if I have it correct, total, okay, which is below my stop for the day. But it's very, very rare that my first two decisions of the day, guys, are wrong or result in a stop. As a matter of fact, if they didn't result in a profit, is pretty surprising. So this is where I want to come to in the decision-making tree, which is discipline over ego and skill. I know that I'm a skill trader. Every one of the spots, every one of these zones, first of all, that I had put out, resulted in counter rotations. Right, we got a rotation right off of 2054. We got a rotation right off of 2051 3/4. We came right off of Globex high. Each of these zones provided on first touch a counter rotation, right? Where I got into, so at this point, what I have to decide, emotionally, I don't want to stop trading. Why? I know that if I work hard, then I'm probably not going to make 3 bad decisions in a row. But here's where stopping trading when things aren't falling into their normal pattern, meaning not the pattern of the market, but the pattern of your trading. How do you know when you're going to have a meltdown day or a day that's going to be utterly terrible? Answer, you don't. Okay, you can get hit at any time and have the market roll hard against you and have a significant drawdown day. My objective in my trading is to get as aggressive as I possibly can with my trade size, and when the market's fitting me, I want to push that trade size as hard as I can in terms of trade setups. But I want to do the opposite when my decision-making tree is moving against me, which means I must be willing to set my ego aside, set my own, what I perceive at least as my own very high skill level at finding trading opportunities aside, and then go and execute, right? And then I want to go and then I want to execute my defensive trade plan extremely well, right? So as we're moving through the course of the day, one of the things I pointed out to the room was that if we traded back up above 2054.50 and closed on a 5-minute bar, that would be this bar right here. I said if we close back up, that we should trade to the other end of the range. I didn't record it. I didn't post it on the Twitter stream. but everyone in the room was pretty clear. I said if we close back up in 2054.50, that we should push to the other end of the range. Now, the reason why I'm pointing it out is not for glory. I didn't take the trade. Why didn't I take the trade? Right now, I can pretty much cover my loss today in 1 or 2 trades in the morning, most likely, right? And if not tomorrow morning, certainly Friday morning, being that tomorrow is a Fed day, right? But what I wanted to do, what I wanted to accomplish is what I'm trying to explain is I stopped putting myself in danger, but I still put myself to work in terms of making what was the next right logical decision, okay? And stopping trading here, but continuing to identify the price action and was very critical to maintaining my confidence, right? Yeah, I took no risk here. I got no reward, but my call was pretty much perfect, right? And if you look, the last piece of that, by the way, on that trap, because people will want to know, was that notice NQ through the course of the day failed to make new lows all the way through. And as a matter of fact, we had already trapped, it broke its structure that it created over here to the left, and then immediately trapped back in. That was a big clue for me. The higher lows, along with trapping back into its upper structure, that we were going, and that buyers are in overall control, right? That we were going to push like this. But I want to point something else out. If you were not patient here, right? I identified on this bar that the market should push to the other end of the range. This move took approximately 2 hours, right? This is essentially 12:30 right here, Central Time. And it took all the way into the close. And then after the close, we pushed all the way up to 2064 at the just after the 3:15 market close. We pushed all the way into 2064. And now it looks like we've settled down at about 2061, right? The point behind that is I went back to testing my decision-making process, which was correct, and I did not sustain any more damage. It was a very minimal down day, right? So here's my next question that I want to ask myself. Would have focusing on 10-point rotations helped me today? Because that's the only thing I did not do. I was very aggressive with my rotation size. And the answer to that is absolutely. From 2054, 2064 was roughly a 10-point rotation. We didn't get it the first time up, right? We went 2054, 2060, 50. We then rotated from 2060, 50 down to 2054. That still didn't give me the trade, but from 2054 to 2063, 75 was almost exactly a 10-point rotation on the test of Globex high. Again, it wasn't a zone, but it was where Globex high was sitting. We then rotate from 2063 all the way down to 2053. That's, again, notice a 10-point rotation, and it gives us a rotation back up for a backside test. Then finally we get to Globex high, which again, this is also confusing when you look at it just like this, right? This looks like it's the only clue that we had that this was not going to roll over was that NQ was not breaking. But from this point, and then the next bar you get right there, it sure looks like we're breaking out of balance for a expanded downside move. That turned out not to be true, and then I was able to identify when we consolidated right above Globex low, the trap back into 2054.50, set up the trade for the rotation all the way back up to what was eventually 2064 just after market close, 2061 during market hours. Okay, so I want to be clear. No, I was very aggressive on my scalp entries. Normally my scalp entries pay me very, very nicely. In this particular case, that did not work. So 2 issues. First of all, on this particular trade, on this scalp entry, there was nothing wrong with it. Where I took my entry, I simply could not get a decent continuation back to the upside. I got run over in the middle of the range. Not terribly upsetting to me there. That happens sometimes, right? This right here, where I took this backside test and I way overstayed my welcome, I can improve there time-wise by coming out of the trade earlier instead of just coming out of half. I should have come out of all if I was going to improve my trading decision. And then the last thing is had I just backed out to 10-point rotations, both upside and downside, I could have even chosen to skip this and wait for the first 10-point down rotation and had a pretty fantastic day to the upside. But the best decision I made of all was to stop trading, guys, put my ego in check, right? And then and put my discipline above my ego and my desire to trade. So that's my 2 cents. I certainly hope that helped. It was a frustrating day. I had to walk myself through all those steps to get to the point where I minimize my down days and can maximize my up days, right? So it's frustrating. We are in a compressed range. The entire range is 12 points. Compare that to a couple of weeks ago. Here, I'll do that really quick. Compare this to a couple of weeks ago, guys. Look at the size of the range bars we had even up till 2 or 3 weeks ago, right? The range was actually pretty good through here. This is covering a lot of territory, a lot easier to trade through this. But when the range starts to get compacted like it is up here, much harder psychologically, especially when your brain still remembers all of this and you're trying to get the discipline to still execute properly in this area. This can actually be harder than this stuff can, because in here the 10-point rotations come fast and easy, and even 2 and 3 point rotations up and down get ticked off really quick, whereas in here you're constantly being forced to determine, should I be patient, or should I exit quickly, or should I hold? And because of the compressed range, it's hard to tell. Again, it took almost today from 12:30 all the way to the close to move from 2052 to 2061, 9 points. If you'll go back and look at here, 9 points was covered in a single 5-minute bar. So the market keeps changing. It makes it harder to trade. You have to keep adapting. Your best survival skill is when your day starts off in a pattern that is not familiar, i.e. I took 2 stops, even if the second stop was relatively small, that told me that I was not in alignment with the market. Stop trading, get back in line with the market, resume trading when you feel you have, not when you feel, when you have evidence of, I see the trade, I'm pointing out the trade, and I'm taking the trade. That's how you want to align yourself. Anyways, my name is Simon. I'm with Trade and Perform Coaching. If you'd like to improve your trading, please come visit us in the room, or if you like one-on-one coaching. Well, actually, I don't have any room for one-on-one coaching. So, but if you would like to improve your trading experience, please join us in the room. The feedback has been enormous. The consistency has been enormous, and the avoidance of the boom bust cycle has been priority for us. So, anyways, have a wonderful night, guys. You can email me at tradeandperform@gmail.com if you have any questions. We'll talk to you soon. Have a good night.